A lot of some figures that Heidi was pointing out there. I wanted to just clarify first. I hope you don't mind. This is a bit technical as we start off this interview. System-wide sales, pesos, 78.6 billion. There's also another revenue figure of 55 billion for the first quarter. I'm wondering what's the difference between the two numbers, Richard?
Right. So system-wide sales is a measurement that accounts for all of our top-line earnings coming in from both company-owned stores as well as the franchise stores, whereas revenues is really our company-owned stores plus our royalty income that comes through. So you will always see a gap with system-wide sales being higher, and that's because we're 57% franchised and 43% company-owned stores.
Understood. Thank you for that clarification. I'm looking now at estimates from analysts. Just throwing the story forward, full year revenues they expect for 2023, 240 billion Philippine currency, Philippine pesos. What do you think of that estimate? Is that an easy target for you? Is that fingers crossed? Is it likely? Is it possible, Richard?
Well, David, we had a very strong first quarter, and we're very encouraged by the fact that it wasn't only a growth on year, but it was also a growth versus pre-pandemic year of 2019. In fact, we had a 44% top-line growth versus 2019. We believe that first quarter being also our softest quarter in terms of seasonality. We believe this trend will continue through quarters 2, 3, and 4, where fourth quarter typically is our strongest quarter. So we are sticking to our guidance of top line growth somewhere between 15 to 20% and bottom line growth of somewhere between 20 to 25%.
Richard, what's your outlook when it comes to China, where the consumer and services growth has been so strong in this recovery, but we're also seeing, a lot of food operators and restaurant operators like Yum China heavily discounting in this environment?
Right. 2022, no, that was a difficult year for, I think, most operators in China due to the COVID lockdown. Having said that, we're seeing very encouraging signs in the first quarter. So China is up double digits. And we believe that second quarter will continue this momentum and, in fact, be even stronger. So I think our three brands are well positioned and really caters, I think, to the Chinese consumers' appetite and demand to come back to in-dining.
Richard, we spoke with Sir Otto, the CEO, late last year, and his guidance for this year was, for the China business, looking to open around 100 stores. Are you guys on track for that?
I believe we'll be there or perhaps even exceed that target. And again, we have three very interesting brands in China with very focused expansion strategy through franchising as well. So we believe that that will be attainable indeed.
Thank you. Richard, inflation globally remains an issue. I'm wondering whether you're seeing that play out as far as cost pressures are concerned. That's one part of the question. The second part is, if you are you still looking to pass that on to the consumer?
Right. So 2022, as we all know, was an incredibly challenging year vis-a-vis inflation. Having said that, Jollibee's been around for 45 years, and we're very proud that our management, our processes, was able to take this on head force. So that's all the way from procurement to supply chain and our commissary. So having a very robust process in place, we're in fact able to absorb a lot of the inflation. So cost efficiency programs resulted in very good yields for us. So we did not pass on all the pricing to consumers. And this, of course, is very important for us because we do want to provide very tasty, great food at very affordable prices as well.
What's the interest when it comes to further M&As and deals at this point?
Since we started this business in 1978, it really started with one brand, and that's the Jollibee brand. And pretty much every other brand we've acquired through M&A through a course of long history. We believe we're now well positioned to represent key brands in 4 strategic pillars. So I think what we'll spend our focus on really is to build out these brands and also optimize opportunities outside of the Philippines through our international strategy as well.
Richard, we'll take that for now at face value, that you're focusing on organic growth. Final question for you. Interest rates have been high globally. You're the CFO. Are you looking at raising any funds this year in the public markets, debt or equity, or at least changes to your capital structure?
David, we've been very fortunate in terms of our debt as well as our total obligation portfolio. We're 86% fixed rate, and these rates were in fact fixed before the start of the interest rate hikes sometime last year. So I think we're in a good position with long tenures as well. So we will hold to our capital structure as we have it today. We're also very fortunate that our operating cash flow is very strong. So we're funding our growth as well as working capital needs through our liquidity programs that we have through our regular business.